Hi, Dominique, and welcome to another edition of the Week Ahead. How are you doing?
Fine, thank you, Andrew. You look already in summer.
Thank you. Um, yeah, so let's start off with Armageddon, I guess. The world coming to an end. The world's largest, I was calling it the world's largest own goal. Um, but okay,
Exactly.
so yeah, so let's get your take of everything that's happened over the past week. Market reaction, obviously politics, Fed. I know we were saying that Powell speaking in a few hours, what you think he might say and kind of start from there.
So as you said, it's a world's biggest own goal in economic terms. So what happens next and what's priced in? I mean, next is a manufacturing recession. My base case, it doesn't turn into economy-wide recessions, that growth takes a hit, a big hit. I think growth this quarter, even before the tariff, because households were spooked by the tariff announcement. They
Yep.
raised the savings rate, and it's possible that consumption is not going to increase quarter on quarter, right? So we get something close to zero, ignoring the big increase in the trade deficit, which is due to importers trying to front-running the tariff. So I think that's the baseline. At the
Mhm.
same time, we just got the NFP. We still have a labor market at full employment. That's also the story from the jolts earlier this week. So that's where we start from. So where we go. Um, I think households get spooked, continue to be spooked. So certainly no decline in the savings rate, simply because for sure that announcement has reduced policy uncertainty, but it's introduced, as you said, this is just beyond belief because biggest own goal in the history of the world. So it's introduced a lot of downside risk to the economy. So I think, households do nothing. They are also going to see the headlines about layoffs in the manufacturing sector. That's also going to spook them. So at best, the savings rate stays constant, doesn't increase further. And then we have, so that's Q2. We have the hit from the tariff. So on inflation and therefore on real incomes, because one reason people really hate inflation is that wages increase much more slowly than inflation. So if we have an increase in inflation, it's almost a arithmetic decrease in real wages. And for all the households who are already struggling, the 40% of households who, according to the Fed survey, don't have $400 to face an unexpected expenditure. Those, they hurt. So what kind
I
of
was
action?
gonna say, I saw like $5 stores, these kind of lower incomes. Those are some of the prices that could hit the most. Stock
100%.
prices. Yeah.
Yeah, 100%. So, um, so those households see a hit to their real income, to their real income. So how bad a hit? The St. Louis Fed had some projection, and I like the St. Louis Fed president. It's not just that he gave me a job once a long time ago, but I think he's one of the deeper economic thinkers on the FOMC. So his staff computed an estimate of the hit from the tariff, the hit to inflation, and it was 50 basis points from first round effect, so just lifting prices, and 70 basis points from second round effect, meaning that everybody else tries to preserve their profit, so raises prices. Workers try to preserve their wage. Uh, but that estimate was based on a 10 percentage point increase in the effective tariff. What we had yesterday on on the second, was a 20 percentage point increase in the effective tariff. This is the same as the increase in tariff during the recession, the infamous Holy Smooth tariff increase of 1930. It certainly it certainly didn't cause the Great Depression, and I'm not expecting to be clear. I'm not expecting a depression. I think we might just escape a recession this time around, but it's incredible. It's just so misguided. And I would have thought that since the 1930s, we learned a thing or two about how the economy works, but apparently not enough to keep economic policy on a rational track. So what does that mean in terms of, so one thing to keep in mind also, so we have this destructive tariff, but there is a good chance we could have an actual increase in the budget deficit, so a fiscal stimulus, and from two sources. First, we're starting that tax revenues are flattening out. If you look at the daily treasury cash flow, you can see that expenditure are on a nice, smooth trend. Thank you very much. But if you look at revenues, as they are no longer increasing, looks like they could be even slightly decreasing relative to GDP. And it looks like after Doge number at the IRS, we have an issue with tax compliance. So there is that.
Right.
And
Plus, gains are evaporating. So there's capital gains that are evaporating in the stock market. I mean, I don't know how much it was, like 4 or 5 trillion that have left.
well,
Yeah,
that is for next year's tax revenue, because remember, we are
yeah,
now paying taxes for 2024.
right. Yeah.
So, but yeah, it's coming. So the noises we are hearing about the budget is that the rules are going to be changed so that Congress can ignore the cost of extending the Trump tax cut, and they are implementing the additional tax cut demanded by President Trump. So no tax on Social Security, on overtime, on tips. At tips, I mean tips for waiters, not our tips. And President Trump said he wanted no cut to Social Security, Medicare, or Medicaid. So to me, you take a decline in revenue, few changes in expenditure, that means bigger deficit, we'll see. But the bottom line is that we could get a stimulus through fiscal policy, a demand
Yeah.
stimulus. So we have a
But
negative.
yeah,
Yeah.
I was just going to say, I saw that they're talking about raising the top tax rates, and that would be a way. So either for people above a million, making $1 million a year, it's 40%, or above, I forgot, it's like 600,000. If it's up to 39.6, and that would pay for a little bit of it. But that's kind of what part of what the Trump tax cuts were initially, right? So they'll put the Trump tax cuts, keep it, and then they'll do some offsetting by taxing the wealthier. Do you think that would pass? And what's your thoughts on that?
So it seems that President Trump has a great degree of control over Congress. And let's give them credit for looking at all policy options, not just the traditional Republican option of so, but
Yeah.
it's like many measures. But just looking at the arithmetic, given the importance of these three expenditures, Medicare, Medicaid, and Social Security, and given the cost of the cuts, and given the propensity of Republicans to assume that tax cuts pay for themselves because they really lift growth,
Yeah.
my hunch is that when all the chips falls, we end up with a bigger, not a smaller deficit. But um, I will write about this. We should see soon enough, because
Right.
the Senate has just voted on its own proposal. Um, so yeah, so we
Yeah.
had negative supply shock,
I was
positive,
going to say
yeah,
the other thing, I guess, is they're I'm assuming because they've created this situation is that there'll be like a whack-a-mole kind of thing where now they're going to, if foreign countries are refusing to buy um, agricultural goods or at much higher or tariff those, then they're going to have to give a lot of money to the farmers. And if
100%.
manufacturing ends up getting actually hit, it's going to make the administration look pretty bad. If companies are actually laying off workers because manufacturing is actually slowing, because things get made in different parts of the world, and then so that's also my
100%.
concern is that they'll just have to start giving out a lot of money trying to address because it
The
goes against
problems they
what
created in
want
the
to do.
first place. Yeah,
Yeah,
100%. So there are risk to the fiscal. It's not just risk to growth, but exactly what you described, that they will try to make up for the um, for the negative impacts of the tariff by giving handouts. That's definitely my scenario, and especially since we have the midterm in November of next year, and we already saw with the elections on Tuesday. So we had an election to the Supreme Court of Wisconsin that was won by a 10% margin by the Democratic candidate, even though this is a purple state. And in
mhm.
Florida, the two special elections to replace the nominees to the administration, the Republican won. No one
Well,
expected
one attempted nominee.
one attempted nominee. Yeah, yeah. There will be I guarantee one thing we're going to see is an enormous number of books written about what's happening now, because it's so momentous, and the side stories, such as
Yeah, yeah,
representative gets nominated, withdrawing, and so on
right.
and so forth. But the bottom line, sticking to the story of what could get the administration to change its tune for sure. So
Oh,
they
but by the way,
will
one last thing before we say is they have gotten the price of oil. If they get the price of oil down to mid-50s,
100%.
that
So
is a
that's
bit of a
another offset.
yeah,
So basically, whether we get into a recession or not really depends on what happens to consumption, and especially to household income. So fiscal offset, yeah. Oil prices coming off, yeah. I thought the other part of the strategy was to keep the labor market hot by withdrawing a lot of migrants. But this ain't happening, as we saw today, with this huge increase in NFP, which is not driven by Native Americans. We Americans are getting older. We don't have enough people to sustain, that sort of NFP increase. And also what we saw this morning was a nominal wage increase are very stable. So no support to real income from
right,
accelerating nominal wage
right.
growth. So that not
What
happening.
somebody had asked me like, so why did government jobs still increase if apparently the Doge is cutting so many?
So first of all, it's more local than
Right.
federal government.
Fine, fine. State and local. Fine, fine. Yeah.
Yeah, and then a lot of the people who have been bought out or fired are still on the payroll because of the notice period. The tragedy in all this is that a lot of the things the administration wants to do actually make sense, like a root and branch review of government spending, but it's just been implemented in such an awful manner that it's just going to discredit any such moves for the next 10 years. I mean, who
Yeah.
is after the distress and the negative impact of the Doge arbitrary filings, who is going, if we get a democratic Congress or democratic president, they won't want to touch the public service, which is
Well, hopefully not.
well, we are
Hopefully,
not there. We are not there.
yeah, because building up a stronger manufacturing, even though we're a service economy, like most people want that, reducing
100%. And
fraud,
also for defense reason, it would make
yeah, for
sense.
defense, exactly.
Yeah,
And for pharmaceuticals, we saw what happened in COVID,
100%.
reducing fraud and waste, um, reducing spending. These are all good things, which I think that's what people supported. It's still it is still early. But so if we're thinking markets wise,
Yeah,
for investors, for our clients, it kind of sounds like steepeners, unless we go into some massive recession, it's going to be all about steepeners as the most glaring trade. Do you agree with that?
yeah. I mean, I agree, except that I think there is either too much or too little priced in terms of Fed cuts and the short term. In the sense that if we have a nasty ding to growth, but no recession, I don't see the Fed cutting 4.5 times
Yeah,
as well, simply because
I guess
we're
that's
going,
really yeah, the way you really, I think you could win even if they only cut two or three,
yeah,
because if it doesn't look like the deficit's coming down, but generally the economy is weak, like,
yeah,
and yeah, sorry, go ahead.
yeah. If we have a recession, the Fed will cut big times. So what we have priced in is kind of in between. And given that we're going to have, as you said, those fiscal offsets, given the strength of the balance sheet of businesses and household, I think we might weather this one.
Yeah,
And so I think there's too much priced in. I'm waiting for Powell to change my call, um, because Powell is,
this afternoon,
yeah,
yeah, even this,
in
fine.
3 hours. I see that you are in a summary time zone. Let's
Uh,
describe it that way.
yeah.
But no, seriously, the problem for Powell is that he's going to face the risk to the labor market with much higher inflation. So far, the measure of long-term inflation expectations that he looks at, like, which is 5-year Bs, stable. We've had a de-anchoring of short-term expectation, which is not great, but he can live with that as long as the 5-year is stable. So what does he do? I just think that he's reactive rather than proactive, and he cuts less than if inflation was on target and there was no upside risk to inflation. I mean, obviously, I'm not Powell, which is why I want to hear
Right.
what he has to say, but that's
What do you think? Yeah, so yeah, so very clearly, what do you think that he's gonna think he's gonna say? I guess he's
so
gonna leave his options open. Why wouldn't he? But yeah.
yeah, he's going to try to say something reassuring, the economy is strong, and yeah, keep his policy option. He's going to refer to what the Fed calls the consensus document, which is their long-term principle, where they explain how they will adjudicate between the employment and inflation legs of the mandate if they are pulling them in opposite direction. And what the document says is that it depends how far from the long-term target employment and inflation are and how long it will take to get there. And if you look at the data right now, the US economy is roughly at full employment, but inflation is above target, and it's about to get a lot higher. So that suggests really waiting to get a better understanding of the damage.
Right. I mean, I'm just laughing because they really have two mandates, jobs and inflation. And inflation is higher than the target, and jobs are, unemployment rate is basically at like 50, 60-year lows, pretty close. And we're talking about how many cuts they're going to do. That's the world we're in.
So I've disagreed with the
You
cuts
got, yeah,
because
yeah.
I thought rationality would prevail, household would
That
get
was your first
because what
mistake.
all,
Yeah.
all we have so far is household raising the savings rate. That's why, we're going to have a big dip in growth this quarter.
Yeah.
But I mean, this, as we said, this is like one of the biggest own economic goal in
Yeah.
modern economic
Let's,
history. So,
yeah, but also just for our clients, it is still early, obviously, and there's still definitely some potential positive outcomes that could come through it. What was the other thing I was going to say?
well, I mean, there is always a risk that Trump could reverse, but I think it's a small risk. I think the best case is that he goes through implementing this, which, by the way, is also going to be complicated and costly. And actually, you could have actual shortage of imports. If
Good
importers
point.
don't know, also the customs service, God knows what's happened after Doge has fired everybody. If there is still anyone who can implement those higher tax, import rates. So yeah. So
By the way, that's another big question, actually, for the higher inflation point, because there will have to be so much more assessing of goods coming into the country. I guess primarily at all the ports. Um, and so much of that probably there'll be snags and things will get caught up and they won't be able to process everything and it'll slow down things. And one of the things, remember, about causing inflation in COVID, it was
100%.
supply. Yeah.
I think you're spot on, and we are going to have shortages, and that's going to lift domestic. I mean, even the prices of things produced domestically. And let's be clear, in this day and age, there is almost nothing that's produced 100% domestically. Even strawberries are probably produced with imported fertilizer. But
Right.
the price of everything
Yeah.
is going to go up.
Yeah, but now I'm just thinking through is if you look on a global scale where inflation should be going much higher potentially here, maybe short term, maybe just a short term, but in places like Europe, like what are they going to do? Because China, Vietnam, Thailand, they got to sell their goods somewhere. And unless Europe puts up their tariffs on the big manufacturing countries in Asia, they're just going to get flooded with deflation.
Well,
By the way, I
or
think something that's already starting.
or they could make a deal that everybody lifts government spending, and they build a trade deal outside of the US. After all, we already have the BRICS. They've been
Right.
talking
No,
about.
but what I'm saying is, let's say that they make a deal with China. What deal would they do that would prevent all the goods that would have normally gone to the US now, another 50% of potential goods would come into or try and come into Europe. And in that case, the just market forces will push down prices because people are like, oh, well, buyers are going to say, well, I can't buy anymore. And they say, okay, well, what if we cut it by 50%? Because they have to move in, their ships are off the shore, or
100%, or the alternative, China really reforms, lowers the private sector savings rates, and becomes less externally
Michael
driven.
Pettis, yeah.
Who
Who
knows?
knows? I mean,
Liang is going to keep
this is
us
day
updated.
two right now. Yeah, so I keep saying it's like, this is day two. So we're
Yeah,
trying to give our best assessment so far. There's so many moving pieces and so many moving parts.
100%. Yeah.
and the impact globally, even outside of the US between other countries, is probably going to be more complicated than, there's, oh, well, we're going to have all these deals. But like, yeah, China, of course, wants a deal with Europe. But why would Europe make a deal with China? That's the part I don't understand. I
Yeah.
understand Canada and Europe making a deal. Sure, that makes sense. Europe more manufacture stuff and Canada more has natural resources. That seems like a good deal for both sides. But doesn't seem as easy as people kind of assessing.
100%. Though I would say one thing, China's recent advances in technology, whether it's EVs or the AI,
Yeah,
those make it more attractive as a leader of a trading bloc. I mean,
yeah,
remember in the old Soviet, under the old Soviet days, we really had two trading blocks, but the technology of
yeah.
the West was so much more so superior.
It's so far ahead. Yeah,
Civilian technology was so
yes,
far ahead. So
yeah,
we were the aspiration for the rest of the world. Now
right.
it's more balanced.
Let's see how it goes. Okay. Thank you. This has been awesome. I know, we're a little bit shorthanded. We really appreciate the whole team kind of agreeing to do this and getting out to all our investors. We'll try and post this in the chats, and obviously everyone's going to get this on Sunday afternoon. So have a great rest of the weekend. The markets, I guess, are opening in 6 minutes. Equity markets, see how that goes. And obviously, as we always say, please reach out to us in any way on Bloomberg, emails, call us, anything you need.
Thank you, Andrew, and thank you, Oliver, for the special effort for this. This is great.
Yes, thank you. Okay, cool. Thanks.